Hello. Thank you so much for joining us today. We are delving into a very interesting topic today called Takaful Insurance. It is an Islamic style insurance that's designed to cater for those members and customers where conventional insurance is not suitable. Today, we are collaborating internationally with a colleague who is based in Malaysia, where Takaful Insurance has been well developed and has gained momentum over the last almost 40 years. Her name is Aiza Benjamin, and I'm so excited to have her collaborate with us today to understand this concept. So please stay tuned, and I'll see you again at the end of the video.
Good morning, Princess.
Good morning, Aiza. Thank you for joining us today. I really appreciate the time that you've given us. I know there's a 3-hour difference where you are, which is similar to our Western Australian colleagues. So I'm so glad. And you're looking fresh anyway because it's first thing in the morning.
First thing in the morning, it's 9 a.m. Yeah, so it's fine. It's good.
Perfect. Can I just ask you to share with our viewers a little bit of your profile and where you are and, your expertise in this area?
My name is Aiza Benjamin. I am a partner at a local actuarial consulting firm out of Kuala Lumpur in Malaysia. And I think the reason why you reached out to me is probably because of the podcast from the Australian Institute of Actuaries. So an actuary, 20 years experience in the Takaful market. I've been very fortunate because I started out my work in Malaysia. So in Malaysia, Takaful first started in 1984. So I've been around that market and contributing and being part of that market for the longest time, 20 odd years.
Wow, you don't look anywhere near someone with that 20-year background. You're quite right. I did stumble across the podcast that you did with another industry colleague with the Actuarial Institute, and I know that they've got quite a wide reach, but I feel like we also have a different audience.
Exactly, yeah. That is, I would say that those would be more technical actuarial people that be listening in.
Yeah, and it's really, really timely because in Australia, we've just passed on a legislation because of a lot of superannuation funds having to satisfy performance testing annually. The regulators, well, the government of the day, have introduced legislation which they promised at the election when they said they're going to look into faith-based funds because this is something we're going to talk about today. They're not really able to invest in certain investment options that are not compliant with like something like Takaful Insurance. So could we start perhaps by just talking about Takaful Insurance and how is that different to a conventional insurance?
It serves the same purpose. You're providing protection cover just as much as insurance does. But the way it's being put together, the way it's organized is different because conventional, traditional insurance is not permissible to Muslims.
Right.
There are certain things where conventional insurance is frowned upon. Part of it is two parts of it, which I'd bring up. One is this concept of risk transfer. So you're paying money to kind of transfer the risk to someone else or to a company, to an entity, and that's not allowed as a Muslim.
So you're referring to Sharia principles,
yes.
Isn't it?
Yeah, Sharia
principle. Are you able
principle.
to give us a bit of background what a Sharia principle is?
Yeah, it sounds scary because sometimes Sharia is denoted in a very negative way, but it's actually Islamic principles that govern the way Muslims not just pray, but it's our way of life. So there's Islamic law around family law, around commercial transactions. This is what we're talking about here.
Yeah.
So it's based on text, Quran text. It's based on what our Prophet Muhammad, his sayings and his way of life. The Sharia principles, commercial transactions. There's 3 elements there that you always talk about. If you research Takaful, they're saying that conventional insurance is not acceptable because there's an element of risk transfer, which can be seen as gambling because you're passing on that risk to someone else. There's elements around what you can invest in, so no usury. So nothing interest bearing is allowed. And the last one was around the transaction has to be ethical, has to be, you can't, for example, provide insurance to a casino.
Yeah. So can I just ask,
Yeah.
you're referring to halal, yeah? In Australia, we tend to associate halal with, an approved way of dietary requirement. But
Yeah.
actually halal means approved. So from a
Um,
Sharia compliance perspective, you've got,
yeah, it's used in a very wide way. So you would have halal investments, halal
yeah,
transactions, but
yeah.
it just means that it's approved for Muslims.
Yeah, so we need halal insurance. In my mind, I
Yes.
think of kebabs.
No.
Yes,
Yeah.
halal
So it's
insurance is
insurance
something
that
that's
would be
approved.
acceptable, that would be okay for Muslims to partake in.
So you talked about Quran, so we will be covering a few pretty common words in Takaful Insurance, but I guess for our viewers, they won't necessarily be familiar with them. So Quran is the text that underpins
It's the
the
Bible for Muslims.
okay.
Yeah.
And so can we talk about the Maisir?
It means gambling. And I think
Right.
that's what I was referring to just now. I was trying oversimplifying it by saying, no transfer of risk. So
So
that's how you would interpret it. No gambling.
yeah, so they're all kind of related in terms of you can't earn riba from Macy or Gara.
Yeah, yeah. So those
Explain
are the
that to
Arabic
me.
words. Yeah. So those are the Arabic words. And I'm not, I don't speak Arabic. Mysore is the gambling aspect of it. So that's not allowed. And that just means because like in conventional insurance, you pay a premium and you get a cover. In Takaful, you'd be pooling with other participants.
Yeah.
And that's why it becomes halal.
Why is insurance? Actually, I do get that. Insurance is seen as a
Transfer
form
of
of
risk.
gambling because
Yeah.
there's no
So it's
guaranteed
there's an
returns.
element of, I wouldn't say gambling, but there's an element of gambling to it because you're paying money and someone's taking on that risk, not you. So you're
Yeah.
transferring your liabilities to someone else. That concept is not allowed.
And it's insuring yourself against the unknown, isn't it? So
Yeah.
it's an event that may or may not happen.
Yeah. So you lose your premium or you might make a gain if you claim.
There's some similarities, though, isn't it? Because instead of calling it premiums to pay for your the cost of getting your cover, it's called something else because it's a donation.
Yeah.
It's a form of
Yeah. Yeah. That's the other Arabic term, tabarruk, which
cover.
literally translates to donation.
Right,
Because you're putting money in as a donation to help other people. So
right.
it becomes a pool of people helping other people, and that's why we're called in Takaful participants rather than policyholder because you're participating in a risk pool.
There's an arrangement that's pretty common in Australia in conventional insurance, which is like,
The conventional similarities is with a mutual. So
okay,
that risk pool is actually owned by the people putting money in. So
and
it's
then
not
they
the
get something
companies.
back.
Yeah. They can get something back. Or if experience is not so great, you kind of have to take time to actually cover that deficit from your own
Right.
pool. Yeah.
Yeah. What about the fees of the people that are
So the
operating
people who manage that risk pool, the people who do the pricing, the actuaries,
yes,
the CEOs, the marketing people, and everyone else, they're numerated by a fee. If you think about a contribution of 100, some parts of it will go towards meeting those expenses. They call it wakala fee. That's the
yep,
typical, yeah, that's a typical Takaful setup, right? You have a wakala fee, which means it's just a fee to the operator
yeah,
who helps operate the fund. And then
yeah,
the rest of it is a tabaro, which is the bit that goes into the risk fund for
right,
the insurance cover.
right. So say, for example, like yourself, your services would be built into that wakala fee.
Yeah.
And
So
it's known
exactly
up
like an
front.
insurance company, yeah, like an insurance company, the way an insurance company works, the whole setup would be similar. You probably have something additional because you have a Sharia advisor on
Yep.
top of your typical insurance setup. But the way you enumerate it is from the fees that you earn on the contribution, pools as well as separated. So you don't get a share of what's happening in the risk pool. You need to price it correctly, you need to reserve for it, but you're not getting a share of that risk pool, because those are participants' money. Does that make sense?
Yeah, I'm just thinking, what about profit share? Is that allowed?
Yeah, it's called surplus sharing. So
Yes.
because there's no profit, right? Because
Yep.
it's your money anyway. So it's a
Yep.
surplus on top of what you have to pay out in terms of claims and expenses. So that surplus is participants' money. So you
Right.
can either keep it within the risk fund for future volatility, or you could, like in Malaysia, in a motor takaful, they credit the surplus at the end of the year back to the participants. But in Malaysia, and not typically elsewhere, you also get an incentive fee, because our regulator is saying that because you've done a good job of managing this risk fund, because there is a risk of you not caring about what's happening in the risk fund. So if you do a good job of taking care of this risk fund, you can have an incentive fee
Okay.
that is paid out of the surplus.
So what happens to claims experience? What if the donation that's been set for the participants isn't enough, and then there's a lot of
Yeah.
participants
Two,
that claim?
yeah, two things happen. One is, you rely on experts, much like an insurance company, to set your contribution rate, which is kind of how premiums are set. There's loadings for commissions, loadings for expenses, and what your expected experience is, right? So you'd have actual principles backing what your contribution should be. So it should, so if you do see any volatility going forward within that risk pool, you should be able to ride it out. So if you have a deficit because of typical volatility, you would rely on future surplus.
So instead of that money going into the customers, it will be retained to help manage
yeah.
the volatility.
Yeah. And the operator in Malaysia is tasked to provide an interest-free loan to cover the deficit.
Right.
So that's the other function of the operator. So
Right.
they provide a loan to meet the deficit for that year, because you've not enough money in the risk pool to pay for all your claims. And you
Okay.
get paid back from the future surplus of the risk fund. Yeah, so you don't have a direct transfer like, okay, that's a deficit. So insurance company, you will plug it, but here you're providing a loan to the risk fund.
And in terms of claims, does Takaful Insurance also have traditional kind of claims assessors, or a
Yes.
particular body that decides who will get the payout, or
Yeah, it
the
was.
terminology?
I mean, all the principles, all the expertise around insurance, you would find that in a Takaful operation as well. You would have
Right.
underwriting, from pricing to claims underwriting. It will work the same
Same
way. It's
way.
just that the risk pool is not the companies, it's the participants.
And so
Yeah.
then the participant, once they get paid out a benefit, does that mean they're no longer eligible to remain, or they can remain and continue to pay for future occurrences of different conditions or something?
It would depend on what product you have, right? So if it's a moto takaful, for example, you're still there for the next year. You can still renew, and the pricing would reflect your claims experience. But yes, you can still renew. But obviously, if it's a term cover and your claim means you're no longer there.
Right,
So
I see. Okay.
sometimes claims happen because you've been very irresponsible as an operator, that you're just taking wakala fee, you're matching what the competition rates is. Yeah, thinking about motor takaful. So there's just not enough money going into the risk pool. So you're deliberately kind of underpricing, and that is mismanagement.
Okay.
Yeah, so it's there's two aspects. There's the volatility, and then there's the mismanagement. So that mismanagement is something that would happen in conventional operation as well.
That sounds
So
really bad. That's like you
yeah,
misbehave.
exactly. So in Malaysia, if you're found to be doing something like that, then you need to pay up.
And the
Yeah.
wakala fee, is that reviewable, renewable every so often, or is that like
Yeah.
set in stone at the beginning of the
Um,
contract forever and ever?
yeah. As long as it's you've agreed to it and it's clear and it's written down in your policy contract from Sharia principles, that's fine. You can charge as much as you want, right?
Yeah.
Because you're upfront about what you want to charge, right? Yeah. So that's a Sharia principle. In Malaysia, where takaful is so well regulated, the wakala fee needs to show this is what I need to pay for my expenses, my commissions. Some part of it should go to profit, but I kind of need to show that I'm not being excessive. I mean, it's a 20, 30-year industry now, and we're one of the largest in the world. So
Yeah.
we've learned a lot.
Yeah.
The industry has
And
learned a
evolved.
lot, and the regulators have also been very supportive and, you know, putting on your consumer hat, making sure that, you know, things go well.
And do you have to be specially licensed as a
Yeah, it's very
Takaful
hard to get.
financial advisor?
Yeah.
Oh,
Takaful financial advice. You're talking about a Takaful company or the advisor?
the advisor. In Australia, you have to be
Yeah.
specially licensed to deal with particular financial products. So is it
Yes,
the same in a
similar.
Takaful
Yeah, similar
environment?
as well. Yeah, similar as
Right.
well. Very well regulated.
And so do you have to be of an Islamic fund or organization to use a Takaful insurance arrangement, or can anyone actually use this product?
Anyone. And if you look at, you know, if you Google Takaful operators in Malaysia, most of them are owned by MNCs now. So we've
Right.
got Zurich here, we've got MetLife here, that has Takaful operations.
Okay.
And yeah, and the participants are, you know, not just Muslims. You know, in Malaysia, it's open to everyone. I think we've got, it's 42% of the life space.
Wow. That's
Yeah,
huge.
it's huge. It's huge.
It's
Yeah.
really giving the conventional insurers a run for their money, isn't it? And so, yeah, those companies you've mentioned are also have very strong presence here in Australia as well. I'm just wondering, maybe there will be that option to be introduced in Australia. Can I ask, are there different types of Takaful insurance? I know that you mentioned, Malaysian version of Takaful insurance. Is there a
Yeah.
difference if it's operating in different
There's
country?
there's different models out there to make takaful work. The one that we practice in Malaysia is called the wakala model.
Yeah.
So the wakala meaning we have the expenses of the fees upfront, right? And then we're very clear about what are the fees we charge.
Yeah.
But there are mudaraba models where I think all the tabaruk goes into one fund, and then you get remunerated from after paying everything, expenses and claims. So there's different structures out there, but generally I would say across the world we're seeing a move towards the wakala model because it's clearer upfront,
Upfront.
and there's
Yeah.
there's that link between how you're numerated and what you're actually performing.
Would it be prudent for anyone pursuing this kind of model to have a Sharia expert on board so that they
Yes,
can?
definitely. That's the prerequisite. You need a Sharia advisory board so that people will actually believe that you're doing it from a Sharia compliant perspective. So
Yeah.
you would have a board that kind of like sits as part of the governing body that signs off to say that your operations, your investments are Sharia compliant.
Yeah, I can see a demand in Australia as well, given that we do have a lot of citizens that identify as
As Muslims,
of an
yeah.
Islamic background, and it
Yeah.
can go from getting a home loan, like debt insurance, or from superannuation funds. For example, I
Yeah.
know of a couple of large Islamic superannuation funds that have to provide insurance, because in Australia, life insurance has to be provided within your superannuation fund, and that's heavily regulated as well. But then if you're an Islamic fund, often they won't provide that automatically. They will only provide it as cover that you need to ask for, which also
Right.
will need to be underwritten. So they
Yeah.
don't get to take advantage of the group insurance arrangement. They said that the interpretation given to them was that insurance is a form of gambling and therefore they cannot provide it automatically. But then I argued, but by not providing it
No.
automatically, that means
Yeah, yeah,
they're
yeah.
asking for it, which again doesn't seem consistent with a halal
Yeah,
version of.
yeah. I mean, there is dispensation. It is something that you need, right? I mean, if it's for a good cause, like if you're worried about your family and your children, you can't get takaful, then the responsible thing to do is get insurance,
Yeah,
right? So there
correct.
is some dispensation around that. But yes, it's not ideal because you're trying to keep your supers Sharia compliant and halal.
Yeah.
But if there is no choice, then I mean, look for that choice, try and get takaful in.
Yeah.
But if there's no choice, then you need to do something. Yeah.
And especially if it's a regulatory requirement, isn't it? So that
Yeah.
kind of dispensation makes
Yeah.
sense.
Yeah.
Now that's
So there's
been
already supers that invest in halal investments already. So that's well thought out. There's a active Islamic supers already. But the
yeah,
missing space is the takaful space, you're saying. The
yes.
insurance cover. Right. Okay.
So what are the challenges that you're facing in the Takaful industry? I know for us in the financial services industry, there's been significant changes in the regulatory landscape. Is something like that happening at the moment in your world?
Yeah, we've got IFRS 17, and that doesn't fit into Takaful speak as well. But I think for any new Takaful operation, if we go back to that supers, it's typically the lack of critical size because, like an insurance operation, there's lots of expenses, operational costs that you need. And if you don't have that critical size to support the business, and that's what we see here as well with the smaller Takaful operators, it's very hard for them to sustain growth, right? To get that growth to support their underlying expenses. So that would be the first hurdle, I would say,
Yeah,
right? Because you can price correctly,
yeah.
but you can't price for expense overruns.
Can a normal insurer offer Takaful?
In Indonesia, you go through a window. So you would
Right.
have like a notional sub fund of a takaful operation.
Yeah.
Not allowed in Malaysia. And I think in Indonesia, it's an initial dispensation. As soon as you get big enough, I believe it's in 2024, they're saying that you need to set up your own company.
Okay.
You need to
Because
be,
it's really important. It feels like from our conversation, the important one is the operator. Like they really have to be the ones that are kind of making sure that it's compliant. It feels like the insurer is kind of just there as a backing, but the operator is the one that's
exactly, yeah, because the participants are just paying a tabaru or paying a contribution, right? And then they look for some sort of certification to say that what they're investing in is Sharia compliant, but they don't do much else.
yeah,
So it's
yeah, yeah.
all on the operator to get the business,
Yeah.
conduct it, run it, make sure the reserves are set up, there's capital around it. So yes, it is very heavy on the operator.
And the fact that it's also heavily regulated as well, I think gives people comfort.
But I was going to say that because Takaful, there's no savings element, right? So
Yeah.
you're just providing a protection cover. Typically, it's 1 year. You're not trying to make long-term guarantees here. So you can have a rate that is reflective of the experience for that period.
Yeah.
So there's a lot less risk. If I look at the risk-based charges that we typically calculate for Takaful operator and conventional, for Takaful it's a lot lower because you typically have a lot less guarantees.
Right.
The reason why it appeals to non-Muslims in Malaysia as well is because it resonates in terms of the ethical investments as well, that
Right.
you're, and the way you conduct business, that you're not insuring casinos or weapon manufacturers or anything like that.
Yeah.
So it's also ethical.
And
So
it's funny you should mention that they probably generate a lot of profits, isn't it? And so here in Australia, for example, for the funds that don't have to worry about Sharia compliant investments, some funds will make money because they're investing in alcohol and what have you. Whereas that is a restriction, that a limitation that Takaful Insurance will have in place, and therefore a lot of the funds will comply with Sharia requirements by attaching themselves to a Takaful insurer.
So it's an alternative way of looking at insurance. It's an ethical way as well, I would say.
So I think we've got them covered. Thank you so much. I think, this Zoom thing has made the reach a lot more global as well, which is fantastic.
Cool, right? Yeah, I'm glad you reached it.
I really appreciate your time. Thank you again for joining us. I hope you find that useful. I am super pumped that with today's technology, we're able to collaborate not just locally, but with international colleagues like Aiza and help us understand new concepts such as Takaful Insurance. If you haven't already, please subscribe, share this video with other colleagues, and also if you like the video, give me a thumbs up. That would be much appreciated. Until our next video, I look forward to connecting with you again. Thank you.